Well, good morning, everyone. It's Tuesday, October 22nd, and the market's going to open up in about an hour and 9 minutes. So there's been more positive news about resolution of trade war, and the indexes are slightly, just a little bit higher this morning. But here's the thing. We're near all-time highs again. All-time highs are right around the 3,035. I'm looking at the S&P E-mini. This would equate to about... let's look at the SPY so you guys can see the same thing that I'm looking at. So we're all on the same page. That would equate to about 300 on the SPY. The high is at 302 on the SPY. So that's the SPY versus the E-mini S&P. Just subtract the zero. One is in the hundreds and one is in the thousands, but they're showing the same thing. Now, here is, let me make it a little prettier for you here. All right. We're near all-time highs. As you could see, we've been congesting. We've been going sideways now for about 6-7 months. And I don't think we're going to see a breakout above the highs till we see a resolution with China. This whole thing about things are looking good, we're going to work things out, I don't know about that. It looks to me like market is reaching for overbought levels. Now, let me show you why. This is the percentage of stocks in the S&P 500 that are trading above the 200-day moving average. Please, please, please pay attention to what I'm saying. This is really important. It's not fluff. This is really important. This is the percentage of stocks in the S&P 500 trading above the 200-day moving average. We're at 68th percentile right now. This is a year. Let's go back 5 years. As you could see here, we hardly ever go past the high 70s. Doesn't happen often. And we're at 69% right now. Now, this is over 5 years. Let's look at 10 years. Look at momentum levels. Notice they decline over 10 years. And right now, we're near that level where they should peak out or close to peak out. Now, you're probably thinking to yourself, well, it's the S&P 500. We may resolve the trade war. Let me show you something eye-opening. Remember this number, 68%, 68.84%? Look at the overall stock market, not the S&P 500, not those 500 large stocks where only 10 of them, like Amazon, Nvidia, drive the market because of large market cap. Remember, you have large market capitalization in those big stocks. But when you look at the broad market, only 51% of stocks are trading above the 200-day moving average, which means the overall stock market is barely bullish. It's literally bullish by 1.35%. If another 3 stocks go south below the 200-day moving average, the overall stock market's going to be bearish. This is all happening while the S&P 500 is almost overbought. And that's telling me that the stock market's not going to go anywhere. Not till we start seeing upside from the small caps. And this is the small caps over the last year. Let me show you. This is eye-opening here. Look at the trading action. That's the highs. That's the low. Looks like we're kind of peaking out, maybe going up to here. But it doesn't look like we're going to break out. And if it doesn't look like we're going to break out, there's not much upside from the S&P 500. It's simple. Why? Because the S&P 500 represents only 500 stocks. And truth to be told, only about 10 to 15 of them have that large market cap to really outperform, like Apple, Amazon, Nvidia. I can literally count them on my hands. But if you look at the overall stock market, if you look at the Russell 2000, or if you look at the growth stocks, basically I'm taking away those large S&P stocks. Look at this, flat, completely flat. And that, taken into account with the fact this is 10 years momentum levels. Look at what happens every time momentum gets closer to 75, 80th percentile. We're at 68th percentile on the S&P. We move down. This is 10 years worth of data. Look at 6 months worth of data. 75, 75. We're at 68. While the overall market, the overall stock market, 51%. So what you have is this. You have an overall stock market that's barely bullish, and you have the S&P, which is rubber band. Remember my rubber band example? Overextended. And till small caps or medium caps or even growth stocks, till they start showing real breakouts above this range, I'm not seeing a huge bull market. Now, Before I let you go, earnings. We have earnings today on, let me make this a little prettier here. We got earnings on Harley Davidson. Looks like it's breaking out above a 6-month high or a 4-month high. That's very positive. Look for continued upside and look for price to continue breaking higher. It's already higher right now by about 5% pre-open. If this thing breaks out, it can go to about 41. That's the first one we're looking at today. Discovery Financial Services, second earnings stock. Doesn't look that great. Trend is down. We're below the 50-day moving average. I wouldn't be buying the stock. I wouldn't be picking lows. I would stay away from this. I want stocks that are near highs when earnings come out. And lastly, we got Biogen. That's a big one. That's going to influence the biotech. Not doing so great either. Out of all of these three, the only one I really like is Harley Davidson. And I'd like to see it continue moving higher at least one more day. Then it would probably pull back a little bit and then be in buy opportunities. Be careful buying stocks right around earnings because volatility can be strong. The best thing to do is wait for the stock to rally on earnings, pull back to the 50-day moving average, and then buy it on a pullback. But again, with the current 50-day moving average, look at this 10-year data. I mean, let's go 20 years. Look at this. Notice momentum levels keep declining. Every time in the last several months since we got up to 70%, we've been going down. And with the overall stock market, only 51%. We're literally, if 3 stocks go south today in the overall stock market, we're going to be in a bear market. We're going to have over 50% of stocks below the 50-day moving average. We right now have only 51.35% stocks above the 200-day moving average. So if you look at the overall stock market, it's far from bullish. It's neutral at best. So don't look too hard at the S&P 500 and don't let those we're near all-time highs fool you because that's really just a handful of stocks. I'll talk to you guys tomorrow. Be careful out there, especially during earnings season. Take care.